Hey everyone, and welcome back to the Investing Talk podcast. We're always looking for those companies that are kind of flying under the radar, the ones that maybe have the potential to really make some big moves. Well, today we're going to take a look at Payoneer Global ticker symbol, PAYO. Now, they're doing some really interesting things in global payments, but their stock price is telling a very different story.
Yeah, it's a little bit of a puzzle, isn't it? I mean, on the one hand, Payoneer's growth has been pretty amazing, but for some reason the market doesn't seem to be buying it.
Exactly. So let's break it down for our listeners. What exactly is it that Payoneer does, and why are some analysts saying that they could be a hidden gem?
So Payoneer basically acts as a bridge for businesses that need to pay each other in different countries. So think about it like this. You're a small business owner here in the US, and you need to pay a supplier, let's say, in China. Now, in the past, that would have been a really complicated and expensive process. You'd have to deal with banks and currency exchanges and international wire transfers, all sorts of headaches.
Yeah, I can only imagine all the paperwork alone would be a nightmare.
Exactly. That's where Payoneer comes in. They've created a platform that makes these cross-border payments super easy, fast, and much more affordable. And their recent financial performance shows that they're doing a pretty good job at it.
Okay, so let's dive into those numbers then. Their revenue growth in 2024 was impressive, right?
Oh, absolutely. They saw a 32% jump in revenue, bringing their total for the year to $831 million. But here's the key. They managed to grow like that while still maintaining a healthy profit margin. Their adjusted EBITDA margin hit 25%, which is $205 million. So we're not just talking about growth here, we're talking about profitable growth.
Right, and that trend continued into the first quarter of 2024 too, didn't it?
Oh, yeah, for sure. In Q1, their revenue came in at $228.2 million. That actually beat analyst expectations by $17 million. And they also blew past the earnings per share estimates, coming in at 8 cents per share, which was 3 cents higher than what analysts were predicting.
Okay, so on the surface, it looks like Payoneer is really firing on all cylinders. But then we look at the stock price, and it's kind of just stuck, trading below $6.
Yeah, that's the million-dollar question. Why is this stock with so much going for it, seemingly trading at such a low price? Well, one argument is that the market just doesn't fully grasp the potential that Payoneer has. Some analysts are saying that the company is seriously undervalued.
I've even seen some analysts go as far as to say that the stock is priced for disaster, which seems a little dramatic, doesn't it?
It does sound a bit extreme, but let's look at why they might be saying that. One of the things they point to is Payoneer's market cap. Right now, it's sitting at around $2.4 billion. And for a company with their growth and their profitability, that seems pretty low.
So the argument is that the market isn't really giving Payoneer enough credit for their future earnings potential.
Exactly. And another metric that supports that view is their price-to-earnings ratio, or PE ratio. Payoneer's is around 20.55. Now, for those who don't know much about this ratio, it basically compares the company's stock price to their earnings per share.
So a lower PE ratio usually means that a stock is undervalued compared to its earnings, right?
That's right. And in Payoneer's case, a PE ratio of 20.55 actually suggests that the stock is pretty reasonably priced, especially compared to the overall market. But those analysts who are calling it price for disaster, they're probably looking beyond just these basic valuation metrics.
So what else are they considering? What could be causing this gap between Payoneer's strong performance and its stock price?
Well, one thing to think about is the general market sentiment. Remember, the stock market is influenced by a lot of different things, including how investors are feeling overall. And right now, there seems to be a bit of a disconnect between the positive things happening at Payoneer and the level of confidence that investors are showing in the stock price. It could be that some investors are still a bit hesitant, maybe because of the uncertain economic climate or because they're worried about the competition in the global payments industry.
Yeah, that makes sense. It's easy to get caught up in a company's success story. But we have to remember that there are a lot of external factors that can influence how the market values a stock.
Absolutely. And it's also worth noting that the global payments market is getting more and more crowded. There are some really big players out there, some with much deeper pockets than Payoneer. This competition could be putting pressure on Payoneer's stock price, even if their business is doing well.
So we have this mix of positive signs from Payoneer's financials, but also some potential headwinds from the overall market and the competition. It seems like we need to dig a little deeper to really understand what's going on. What are some of the key developments or events that our listeners should keep an eye on?
Well, one crucial event is just around the corner. Payoneer is set to release their fourth quarter and full year 2024 results on February 27th, 2025. That's less than a week away.
Okay, so mark your calendars, everyone. This earnings report could really shake things up for the stock. If they exceed expectations, it could push the price higher. But if they disappoint, it could send the price down.
Exactly. And it's not just about the numbers themselves. Investors will be paying close attention to what the management team says about their plans for the future. What's their strategy for growth? How are they dealing with the competition? Are they confident that they can keep this momentum going?
So the earnings call itself could give us some valuable insights that go beyond just the numbers. What else should our listeners be watching?
Well, Payoneer recently got regulatory approval for a strategic acquisition in China. This deal is expected to close in the first half of 2025, and it could have a major impact on their future growth.
Right, the China acquisition, we've been hearing a lot about that. Can you tell us a bit more about why this is such a big deal for Payoneer?
Sure, China is the second largest economy in the world, and it's a rapidly growing market for e-commerce and digital payments. For Payoneer, getting a stronger foothold in China is a huge opportunity to expand their business and tap into a massive new customer base.
It sounds like this acquisition could be a real game changer for them, but integrating a new business, especially in a complex market like China, can be tricky. What are some of the risks or challenges that investors should be aware of?
You're right, integrating acquisitions can be tough, especially when you're dealing with different cultures, different regulations, and different ways of doing business. There's always a risk of unforeseen problems, delays, or even cultural clashes that could derail the whole thing.
So while the China acquisition has a lot of potential investors, investors need to watch carefully and see how smoothly Payoneer can handle this integration.
Absolutely. And there's one more thing I want to mention. There's been a noticeable increase in options trading activity around Payoneer stock. One large trade in particular caught our attention. It involved 1,200 call options for February 21st, 2025.
That's interesting. For those who aren't familiar with options trading, can you quickly explain what this means and why it might be significant?
Sure. So options contracts give investors the right, but not the obligation to buy or sell a stock at a certain price by a specific date. And call options specifically are bets that a stock's price is going to go up. So this big trade of call options expiring on February 21st suggests that someone is putting a lot of money on the idea that Payoneer's stock price is going to increase in the very near future.
And this large trade happened just a few days before the earnings release and right after the news of the China acquisition broke. So it definitely makes you wonder.
It does. It makes you think maybe someone out there knows something that the rest of the market doesn't.
So we've got this intriguing situation unfolding. A company with impressive growth, a lagging stock price, an upcoming earnings report that could really change things, a potentially game-changing acquisition in China, and some unusual options activity that hints at something going on behind the scenes. What's the best way for our listeners to approach all of this? Should they be rushing to buy Payoneer stock, or should they be super cautious?
I think the main takeaway here is that Payoneer is a really interesting example of how a company's performance and its stock price don't always match up. It reminds us that investing isn't just about looking at numbers. It's also about understanding how the market thinks about a company. It's about assessing risk. And honestly, it's a bit like being a detective.
Well said. We've covered a lot of ground in this first part of our look at Payoneer Global. We've talked about their impressive growth, the mystery of their low stock price, and some important events that could have a big impact on their future.
Welcome back to the Investing Talk podcast. We're really digging into Payoneer Global right now, trying to figure out what's going on with this company that has everyone talking.
It's a fascinating case, isn't it? I mean, we've got this company Payoneer that's showing some really strong growth, but the stock price just isn't keeping up. It's almost like the market hasn't fully caught on yet.
Right. And as we talked about in the first part of this episode, there are a few things at play here, like the overall market sentiment, the competition in the global payments industry, and those upcoming events like their earnings report and the acquisition in China. It all adds to the complexity.
Exactly. And before we get too far into those things, I want to go back to something you mentioned earlier about Payoneer potentially being undervalued. You talked about the EV/EBITDA ratio as a key metric that some analysts are looking at. Can you explain that a little more for our listeners who might not be familiar with it?
Absolutely. EV/EBITDA stands for enterprise value to earnings before interest, taxes, depreciation, and amortization. I know it's a mouthful, but it's a really useful way to assess a company's valuation. Basically, it compares the company's total value to its earnings, but it also factors in things like their debt and how much cash they have on hand.
So it gives us a more complete picture of their financial health than just looking at their earnings in isolation.
Precisely. And a lower EV/EBITDA ratio usually suggests that a company might be undervalued. So in Payoneer's case, their EBITDA ratio is right around 6, which is pretty low, especially compared to some of their competitors in the global payment space.
So that low ratio is one of the reasons why some analysts are saying that Payoneer's stock is priced for disaster.
It definitely adds weight to that argument for those who believe the market hasn't properly recognized Payoneer's true value.
Okay, so we've got this group of analysts who are raising a red flag saying that Payoneer is undervalued, but then we also have those who are more cautious. What are their concerns?
Well, as I mentioned earlier, the global payments market is incredibly competitive. You've got companies like PayPal, Stripe, and Wise. These are big players who already have a significant share of the market.
And those are some tough companies to go up against. It makes you wonder if Payoneer can really keep up in the long run, even with their impressive growth.
That's the big question. And it's not just about the competition. There are other risks to consider too. For example, Payoneer is currently profitable based on their adjusted EBITDA. But if you look at their GAAP earnings, which follow stricter accounting rules, the picture might be a little different.
So what you're saying is that investors need to look closely at the numbers and understand the different ways a company can calculate and report its profitability.
Exactly. It's important to look beyond the headlines and really understand the nuances of their financial reporting.
Okay, so we've got this back and forth between those who are bullish on Payoneer and those who are more skeptical. What are some of the key factors or events that could tip the scales one way or the other?
Well, that upcoming earnings report on February 27th is going to be crucial. If Payoneer can deliver another quarter of strong growth and beat those analyst expectations, it could really boost confidence in the market.
Right, meeting or exceeding expectations could definitely change the narrative and get more investors interested.
Exactly, and it's not just about hitting the numbers. Investors will be listening to what the management team has to say during the earnings call. What's their outlook for the future? How are they addressing the competition? Are they confident they can maintain this growth?
So the earnings call could give us some valuable insights into Payoneer's strategy and their ability to handle the challenges ahead. What else should investors be paying attention to?
The China acquisition is another major development that could have a big impact on Payoneer's future. Successfully integrating that acquisition and tapping into the Chinese market could unlock a lot of growth potential.
But as we've discussed, integrations can be difficult, especially in a market as complex as China. It's not a guaranteed success.
Absolutely. Investors need to keep an eye on how this acquisition plays out and whether Payoneer can overcome any potential hurdles.
Okay, so we've got the earnings report, the China acquisition, two big events that could either validate or undermine the bullish case for Payoneer. And then there's that unusual surge in options trading activity that we talked about in the first part. Do you think that's something investors should be paying attention to?
I think it's definitely worth noting when you see large options trades, especially those involving call options, it often suggests that some sophisticated investors are making bets on the stock's price movements.
So this increase in call options activity could be a sign that some big players are anticipating a positive move in Payoneer's stock price.
It's possible it could mean they have access to information or insights that the rest of the market doesn't have yet, or it could just be a speculative bet. It's hard to say for sure.
It definitely adds another layer of intrigue to this whole story. So we've got these fundamental factors, these potential catalysts, and now this mysterious options activity. It seems like we're starting to get a more complete picture of Payoneer and what's happening. But I know we also wanted to talk about the technical side of things. What can technical analysis tell us about this company?
Technical analysis is a really interesting approach to investing. It's all about looking for patterns and price and volume data. To try and identify buying or selling opportunities, it's a way to gauge market sentiment and try to predict where the price might go based on historical data.
So it's kind of like reading tea leaves in the stock market, trying to find hidden messages in the charts and graphs.
That's a good analogy. It's not an exact science, of course, but it can provide some valuable insights, especially when you combine it with fundamental analysis and an understanding of the overall market context.
Okay, so let's put on our technical analysis hats for a minute and look at Payoneer's stock chart. What are some of the key indicators we should be paying attention to?
Well, one of the first things we look at in technical analysis is the price trend. Is the stock moving up, down, or sideways? Are there any clear patterns emerging?
So if a stock is consistently moving upwards, that's usually seen as a positive sign, right? It suggests that there's buying pressure and that investors are optimistic about the company.
Exactly. And on the other hand, a downward trend suggests selling pressure and pessimism. In Payoneer's case, the stock has been pretty volatile over the past year. It swung between a low of $4.22 and a high of $11.29. So there isn't a clear long-term trend yet.
No clear long-term trend. What about shorter-term trends? Are there any clues there that could help us understand what's happening?
Well, as of today, February 19th, 2025, Payoneer's stock is trading around $10.71, which is a bit higher than yesterday. So that might suggest that there's some short-term upward momentum building.
Interesting. So even with all the uncertainty around Payoneer, the stock is actually showing some signs of life.
Right. And another technical indicator we often look at is the moving average. Moving averages essentially smooth out those price fluctuations and help us see trends more clearly.
So it's like a filter that removes some of the noise from the chart and helps us see the bigger picture?
Exactly. We usually focus on two main moving averages, the 50-day moving average and the 200-day moving average. The 50-day is a shorter-term indicator, while the 200-day is a longer-term indicator.
Okay, so what are those moving averages telling us about Payoneer?
Payoneer's 50-day moving average is currently at $10.36, and the 200-day is at $7.89. The fact that both of these are trending upwards is generally seen as a positive sign. It suggests that the stock is gaining strength in both the short term and the long term.
So even though the stock has been volatile, those upward trending moving averages suggest that there's some underlying strength there.
Right. And there's one more technical indicator I want to mention, the Relative Strength Index, or RSI.
The RSI, I've heard that term, but I'm not entirely sure what it means. Can you explain it in a way that even I can understand?
Of course, the RSI is basically a momentum indicator. It measures how strong recent price changes have been to determine whether a stock is overbought or oversold. It's measured on a scale from 0 to 100.
So if the RSI is high, it means the stock is overbought and might be due for a correction. And if it's low, it means the stock is oversold and might be ready to rebound.
Exactly. An RSI above 70 is usually considered overbought, while an RSI below 30 is considered oversold. Payoneer's RSI right now is around 46.69, which is right in the middle neutral territory.
So the RSI telling us that Payoneer stock is neither overbought nor oversold. It's kind of in a wait-and-see mode.
Yeah, that's a good way to put it. The technical indicators we've looked at are giving us a mixed picture. We've got some positive signs like those upward trending moving averages, but we've also got some uncertainty shown by that recent volatility and the neutral RSI reading.
It seems like technical analysis isn't giving us a clear answer here. It's more like a set of clues that we need to consider alongside the fundamental analysis and those upcoming catalysts.
Exactly. Technical analysis is just one tool among many. It's important to use it along with other forms of analysis and always think about the bigger picture.
Well, we've covered a lot in this second part of our look at Payoneer. We've talked about the arguments for and against their current valuation, discussed those key events that could move the stock, and even explored the world of technical analysis. Welcome back to the Investing Talk podcast. We've been on this deep dive into Payoneer Global, and we've looked at their financials, their valuation, and even some technical analysis. But there's one thing we haven't really talked about in detail yet.
You mean their actual business model?
Exactly. We can get so caught up in the numbers and the market trends, but we need to understand how a company actually makes money. So let's zoom in on what Payoneer does and how they've managed to carve out their space in the global payments world.
Well, at its core, Payoneer is all about making cross-border payments simpler for businesses. Let's say you're a small business owner in the U.S. and you need to pay a supplier over in Europe. Traditionally, that would involve a ton of back and forth with banks, currency exchanges, international wire transfers, the whole 9 yards.
Sounds like a logistical nightmare, expensive and time-consuming.
Exactly. Payoneer streamlines that whole process. They offer this platform that allows businesses to send and receive payments in all kinds of currencies, manage their global finances, and even get access to working capital.
So they're kind of like a one-stop shop for all your global payment need.
Exactly. They've created this whole ecosystem that makes it so much easier for businesses to operate internationally. And that's a huge advantage in today's world.
But as we've mentioned, Payoneer is not the only player in this game. The global payments market is super competitive with some big names already dominating the scene. How does Payoneer set themselves apart? What makes them unique?
One of their key strategies has been to focus on certain niches within the global payments landscape. For example, they've really established themselves in the e-commerce and online marketplace space. They offer tailored payment solutions for platforms like Amazon, Airbnb, Upwork, that sort of thing.
So they're targeting businesses that mainly operate online and have a global customer base.
Exactly. Those platforms are growing like crazy, and they need specialized payment solutions that can handle all the complexities of cross-border transactions, currency conversions, different regulations. It's a lot to juggle.
It's smart to find your niche and become a leader in that area. But can they really keep up with the giants like PayPal, Stripe, Wise? Those are some tough competitors.
It's definitely a challenge, but Payoneer does have some things going for them. For one, they've built a really good reputation for being reliable and having excellent customer service. They also have a global presence with offices and operations in over 150 countries.
So they're not just some small startup trying to break in. They've got the infrastructure, the experience, the global reach.
Right, and don't forget about that acquisition in China we keep talking about. If they can make that work and leverage their expertise in the Chinese market, it could be huge for their growth.
Okay, so we've got a solid business model, a targeted niche, a global presence, and a potentially game-changing acquisition in the works. But what about the future? What are some of the trends and challenges that could impact Payoneer down the line?
Well, one of the biggest trends we're seeing in the payment space is the rise of mobile payments. More and more people are using their smartphones and other mobile devices to manage their money, send money, make purchases. This is especially true in emerging markets where mobile phone use is often higher than traditional banking.
So Payoneer needs to make sure their platform is mobile-friendly and can adapt to this mobile-first world?
Absolutely. They need to be where their customers are, and increasingly that's on their phones. And it's not just mobile payments. The entire financial technology landscape is changing so rapidly. New technologies like blockchain and artificial intelligence are emerging, and they could really disrupt the traditional ways of making payments.
So Payoneer needs to be innovative and adapt to stay ahead of the game.
Exactly. They need to keep investing in research and development, explore these new technologies, and be willing to adjust their business model as the market changes.
And then there's the regulatory landscape, which is always a challenge for financial companies.
For sure. The global payments industry is heavily regulated, and those regulations are always evolving. Payoneer has to stay on top of those changes and make sure they're complying with all the laws in every market they operate in.
Sounds like navigating those regulations could be a full-time job in itself.
It definitely is. And let's not forget about cybersecurity, which is a huge concern for any company handling sensitive financial information. The threat of data breaches and cyber attacks is always out there, so Payoneer needs to invest in robust security measures to protect their customers and their reputation.
So it sounds like Payoneer has its work cut out for them, but they're also in a position with lots of potential.
Exactly. Risks and rewards come together. I think what makes Payoneer so interesting is that they're right at the crossroads of several major trends: globalization, e-commerce, mobile technology, financial innovation. It's a dynamic and growing industry with lots of possibilities, but they also face fierce competition and a constantly changing environment.
So what's the final verdict? Is Payoneer a good investment?
It's never a simple yes or no answer. It really depends on your individual goals, how much risk you're willing to take, and your time horizon. What we've tried to do in this podcast is give you a comprehensive look at Payoneer, their business model, their strengths and weaknesses, the opportunities and challenges they face.
I think we've accomplished that. We've looked at their financials, explored their valuations, dived into technical analysis, and we've really broken down their business model and the competitive landscape. Now it's up to each listener to do their own research, weigh those risks and rewards, and decide if Payoneer fits their investment strategy.
Exactly. That's what being a smart investor is all about. Being informed, doing your homework, and being ready to adapt as the market changes.
Well said. And that brings us to the end of our deep dive into Payoneer Global. We hope you found this episode informative and helpful. And as always, we love hearing from our listeners. So please leave a comment, share this episode, and subscribe to the Investing Talk podcast for more in-depth discussions on companies shaping the world of finance. Until next time, happy investing.